I don't think the average Bitcoin owner believes that they've got something that is nothing. They know that they've got the most secure, sound form of money in the world, and they know that the stock-to-flow ratio is much higher than gold and going down every 4 years. And ultimately, Bitcoin is going to demonetize gold in the same way that gold demonetized silver. If you take a look at that chart, and the chart was in my presentation yesterday, that charts the number of ounces of gold against Bitcoin, it has been up and to the right since Bitcoin has been formed. Right now, it is on a drawdown. It's roughly at 24. It's been as high as 40. It's going to 60, then it's going to 80, then it's going to 100, then it's going to 120. I mean, Bitcoin's going to demonetize gold.
Bitcoin isn't just digital cash, it's a revolution in how the world thinks about money, value, and trust. Lawrence Lepard emphasizes that the core disagreement comes down to how each side defines money. Drawing on Austrian economists like Menger, he argues that money has always been whatever society accepts as the most liquid and convenient good. For thousands of years that was gold, thanks to its physical properties. But Lepard stresses that money has also always been a ledger and accounting system of who owns what. In a digital world with bank balances existing only as database entries, he believes Bitcoin represents the first truly immutable digital ledger, solving the mathematical problem of secure, bearer-style ownership without requiring trust in any third party. Lepard challenges the idea of gold-backed tokens, calling them tits on a bowl because they reintroduce counterparty risk. Someone still must hold the gold and guarantee its existence. In contrast, Bitcoin's value comes from its decentralized verification and provable scarcity. While fiat currencies dominate the medium of exchange function, he argues they have failed as a store of value. Instead, gold and Bitcoin are now competing for that role. For Lepard, value itself is derived from collective belief, and the growing adoption of Bitcoin indicates that more people increasingly perceive it as a superior monetary asset. Looking forward, Lawrence Lepard contends that Bitcoin's properties, particularly its stock-to-flow dynamics, make it a rising competitor to gold and capable of eventually demonetizing it, like how gold once displaced silver. He highlights long-term charts showing Bitcoin strengthening against gold despite periodic drawdowns. Although critics argue that Bitcoin lacks intrinsic value, Lepard insists that its digital scarcity, security, and independence from state control give it monetary qualities strong enough to challenge gold's historical dominance. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
Fiat is doomed. I think where we differ greatly is on what money is, what it can be. And I think if you study the Austrian economists, including Menger, what they've said is that money is always what's accepted by mankind as the most liquid good. And historically, Peter's right, 5,000 years, the physical properties of gold made it the best money known to man. But money is and always has been a ledger. You don't have dollars in your bank account, you just have digital entries on a computer. We live in a digital world, and ever since the telegraph got invented, gold hasn't really been used in day-to-day transactions. You don't take a gold coin and purchase something, although it preserves purchasing power. So this ledger nature to money, I think, and we live in a digital world, I think money is going to increasingly become more of a ledger. And I think that what Bitcoin did was it cracked the mathematical problem of making a ledger in something that's digital immutable, and that when it did that, now people are beginning to accept that it has monetary properties. And Peter can argue that gold is better, and in some ways gold is better, but what I would say is the adoption continues to increase, and unless that reverses itself, I don't see how it doesn't increasingly, quote unquote, become money because it has money-like characteristics. Let me just add one other point. Peter thinks that digital gold, or that gold attached, a gold token is the future, a blockchain-backed gold token. To me, that's tits on a bowl. You have gold or you have a Bitcoin because there is no third party involved. It's a bearer asset. You don't have to worry about anybody else. The minute you say, I'm going to sell you a token backed by gold, well, who are you? And how do I know the gold is really there? Mm-hmm. And so, to me, that's a non-starter.
Yeah. Well, they could, but they have in the past,
but they're not.
But
they will.
There are two attributes of money, right? One is store of value, and one is medium of exchange. I mean, let's face it, fiat has won the medium of exchange game overwhelmingly, right? And gold and Bitcoin are these two alternative things that kind of triumph or are trying to grab the store of value case, because the fiat store of value case is a piece of shit, right?
Right, but to store value, you have to have value. You can't store what you don't have.
Well,
Bitcoin doesn't have value.
But what is value, Peter? It's perception. It's what people perceive to have value. I mean, gold's a shiny rock, and people have perceived it to have value because of it. Because
it's metal. It's metal.
Metal, fine. Because of its qualities. It's the qualities that give it the value. And an immutable ledger has a different set of qualities that, if people believe that it has value, then it has value. And a couple hundred million.
That's why fiat currency has value, because people believe in it.
No, fiat currency has value because the government tells you it has value, and it's legal tender. One of the problems we have here with both of these assets is, and this should be changed, is that they should both be made legal tender. We should not be paying capital gains taxes on gold or silver or Bitcoin, and that's one of the. That's one of the recommendations of my book, is that the government should make all of these forms of money legal tender and let the best one win. And maybe it'll be gold, maybe it'll be Bitcoin. We all have different opinions. I don't think the average Bitcoin owner believes that they've got something that is nothing. They know that they've got the most secure, sound form of money in the world, and they know that the stock-to-flow ratio is much higher than gold and going down every 4 years. And ultimately, Bitcoin is going to demonetize gold in the same way that gold demonetized silver. If you take a look at that chart, and the chart was in my presentation yesterday, that charts the number of ounces of gold against Bitcoin, it has been up and to the right since Bitcoin has been formed. Right now, it is on a drawdown. It's roughly at 24. It's been as high as 40. It's going to 60, then it's going to 80, then it's going to 100, then it's going to 120. I mean, Bitcoin's going to demonetize gold. It's just that simple. It's a better form of money.
Lawrence Lepard acknowledges that while Bitcoin software is open source and improvements are proposed and voted on transparently, there is a small risk tied to the group of core developers who manage upgrades. Debates, like the 1 over block space and the op return function, highlight that disagreements exist even within this small team. Lepard notes that future threats, such as quantum computing, could potentially compromise Bitcoin's security by allowing coins or passwords to be hacked. However, he stresses that these risks are extremely low due to the safeguards in place, including community approval, voting, and the possibility of forks. He also points out that Bitcoin has demonstrated resilience over its 16-year history, surviving drawdowns and periods of uncertainty thanks to its underlying properties. Lepard emphasizes that the continued growth in adoption is critical to Bitcoin's success, likening it to dogs eating the food, a venture capitalist metaphor for increasing usage driving value. He points to metrics like the growing number of addresses, hash rates, and transaction volume as evidence that demand continues to rise. Additionally, he explains how stablecoins, such as Tether and Circle, have grown primarily as on-ramps and off-ramps for crypto trading, but also as alternatives to the traditional SWIFT banking network. Events like U.S. sanctions on Russia accelerated stablecoin adoption, allowing users to move dollars outside the traditional banking system, demonstrating both the practical utility of crypto and its increasing integration into the global financial ecosystem. Let's get back to the interview.
I think the validity, the only concern that I have, and it's a concern that actually Michael Saylor has, because I asked him in a small group private conversation, is that the Bitcoin software and code is controlled by a group called the core developers. And the code is open source, everyone can see it. It's not very, so there's nothing secret about it. And improvements and changes are proposed and voted on and then accepted. And if somebody really wants to change it, they'll try a hard fork, and of course nobody will follow them. But upgrades and changes, small things generally, are made by this group of people over time. And as with any group of people, they don't always agree. And there's a debate going on right now over something called op return, which is something to do with the space on each block and what can be in it. And there's a very strong argument on one side, a strong argument on the other side. I have a view on it. I'm not going to state it here because it's not the point. The point is that Bitcoin, the software, will have to evolve over some period of time to deal with various threats, one of which is quantum computing, which I think doesn't really become a threat for at least 10 years and maybe 20, based on the scientists and the things I've read, and I read a lot about it. So I'm not terribly worried about it. But the point is that it could become a threat, and quantum computing would allow people to hack the coins, hack the passwords on the coins, which is what makes the coins secure. So is Brett and I were talking about, the whole notion it's completely immutable. You know, there's some very small percentage chance that someday it's not, unless it's upgraded, and that upgrade would have to take place as a result of the core developers. And so, you know, as Saylor said to me, he said, look, Larry, you know, the problem with human beings is they want to fix stuff, they want to tinker with stuff, and this thing is working perfectly and beautifully, and the only thing that concerns me is that some group of rogue core developers would mess with it. Now, as I say, there are safeguards because it would have to be approved, voted on, accepted, forked, et cetera. So I rate this as all extremely low stuff, but it's not zero. The second criticism, I think, well, that's really the major one. That's really the only one I can think of. I've said to other people, though, if for some reason adoption were to slow down and people were to just kind of and this is why when I argue with Peter on this, Peter's like, well, okay, it's going to blow up here, Larry. It's eventually going to die. And I'm like, okay, fine. What's the proximal event that's going to cause it to blow up? Because it's been 16 years and it hasn't blown up. It's retreated. It's had big drawdowns. We all know that. But every time it comes back because the underlying properties are what they are. And as long as adoption continues, as long as more people, I call it, in my book, I call it dogs eating the food. This, one of the great old venture capitalists at Sequoia said, you know, when I'm looking at companies to invest in, I want to see situations where the dogs are eating the food, and more dogs and more food over time. And so, you know, implying increased demand. And so, if you look at addresses, if you look at hash rate, if you look at usage, if you look at anything, transactions, et cetera, in Bitcoin land, it's growing consistently. Yeah. Part of the use case for stablecoins is an on-ramp and off-ramp for dollars. And just so, I don't know if everyone here knows what stablecoins are. Stablecoins are coins that they're like crypto, that you can trade through a crypto account, but Tether and Circle are the two biggest issuers. They're about $200 billion total in size. And they buy treasury bills behind it. They take in your cash, buy a treasury bill, and then issue you a token that represents a dollar. But let me say, Peter's right, one of the main use cases, not the only main use case for stablecoins, is an on-ramp and off-ramp for crypto trading. But what really drove stablecoin adoption is I view the stablecoins as an alternative to the SWIFT network. So what happened is when the US decided to sanction Russia and sanction Iran and say to all the business people there, and I was in Prague recently, you know, earlier this year, and I met with a lot of Russian business people, suddenly they had no way to pay anybody or move money or receive money or whatever it might be. But they quickly, you know, smart entrepreneurial workaround, they get a Kraken account, and the dollar is the universal unit of measure, so they just say, fine, pay me, you know, stablecoin dollars into my Kraken account.
Bitcoin's resilience and growing adoption underscore its potential as a durable form of digital money. While small risks exist such as the influence of core developers or future quantum computing threats, these are mitigated by transparent governance, community oversight, and the protocol's design. Its value continues to be reinforced by increasing usage, transaction growth, and network expansion, much like stablecoins have demonstrated utility as both trading tools and alternatives to traditional financial systems. Ultimately, the combination of scarcity, security, and widespread acceptance positions Bitcoin to maintain and potentially expand its role as a store of value in a digital economy. How might the growth of Bitcoin adoption and stablecoin usage impact the future role of traditional fiat currencies in the global financial system? So, stay tuned for clear, data-driven insights into the financial system. Don't forget to like and subscribe so you never miss our weekly updates. Thank you for your continued support, and we hope you enjoy the video.